What's up, guys? This is Carter Thomas with Coin Mastery TV. Today, make sure you go to coinmastery.com/Binance and get yourself an account with Binance if you don't already have one. The reason why is that exchange is the new highest volume exchange. It's also where all the hottest, hypiest, most explosive new coins are going to be listed. So if you don't have an account there, you got to go get one just so that you can even be in the game. A lot of people don't realize that. They think Bittrex is the only game in town. So go sign up for an account there. Be glad you did over the next few months. Today, what we're talking about is a little bit about what I'm looking at this year from a portfolio standpoint, what I've got my eyes on. And we're going to talk about a little bit about why I like it, both from a short-term and a long-term perspective, with the goal of helping you guys make better decisions about the trades that you are going into. One of the things that is really dangerous about moments like this, and we're going to talk about this towards the end, is the blending of crypto from being a financial market and almost turning into a business opportunity market. I can give you a little bit of experience that I've had, or some stories of the experience I've had in that world, and the crossovers and the lessons learned, so that you make the most money possible, and more importantly, you don't lose that money. There is nothing worse than making a ton of money and then losing it all, and that's really the name of the game, especially right around now. So that's why we're going to talk about a little bit of news, but mostly just talking about coins specifically today, what looks good, and a little bit of analysis on the charts to hopefully help you guys make some decisions. Kicking it off with Bitcoin. Now, as you guys know, yesterday was everyone came back to the office, and I've had a handful of discussions, or enough discussions, I would say, that warrant seeing a lot of new opportunity coming in. Meaning, there are a lot of people who yesterday was the first time a lot of wires were going to hit, first time a lot of funds were going to get money, and the instructions of those funds were, hey, just go buy us as much Bitcoin as you can. We want to be in here. We want to hedge. We want to be a part of this. And then later on, we can talk about the riskier assets or the portfolio, but just get us some Bitcoin. That was the overall sentiment that I heard from talking to a bunch of different people. And yesterday, we saw a little bit of that. We saw Bitcoin had a bit of a jump. I'm looking at the daily charts here, and you could see a loose trend line. I'm not going off the wicks on the daily candles. I'm just going off the bottom of the candle up to the bottom of the candle right around the end of December 31st-ish, maybe December 30th, give or take. And you can see how this trend line is showing where there was some level of channel support right here. Now, the other one would be on top here, which is really less relevant at this point because we're not as concerned. What I think would be interesting, though, is if we throw down a quick retracement. Let me pop that on there. You can see that at the 50% retracement, we saw this whole area really kind of intersected with itself, right? Where you see the 50% hitting this line. I mean, it's kind of a self-fulfilling prophecy because it's only two parts. But you can't really do a larger trend line yet. Because of the, let me go see if I can, the way that this is going parabolic. So that's really the sweet spot. If it broke through this, that would be a bearish signal. But for now, we're keeping it here. As this month unfolds, we'll keep an eye on all of this. I think that the way that the altcoin market is going right now, there's so much hype. There's so much greed. There's so much desire to make money as fast as possible to get that 100x return, that Bitcoin is going to need a lot of institutional money to combat that. I think that the retail market, which is me and you, people who buy on Gemini or Coinbase, and then you go into Bittrex or Binance or KuCoin or whatever you're trading on, is actually a very large force right now. And I think that Bitcoin is going to there's going to need some juice to overtake that. Whether that happens the next couple of days, I don't know. Whether it takes another month and a half, 2 months, I don't know. But at some point, Bitcoin will get the momentum back. Inevitably, it'll lead into the ETF, which is really the thing. Like that's what we talked about on Monday. Yeah, that's going to blow it up. So keeping an eye on Bitcoin as it relates to, think about Bitcoin as how many of the big buyers are coming in. And you think about altcoins as how many of the people that have been in the game for a few months that are looking for the highest ROI possible. And which one of those has the most attention right now, which is willing to put more money in. And whichever one that is where the gains are going to go. And right now it's on the altcoins because that's where everyone is. It's pretty, I shouldn't say easy, but you can glean that relatively quickly by looking through Twitter, by CNBC, whatever it may be. So we're watching Bitcoin, especially off this particular line, and then off the retracement, see how it hits those levels. And we'll go from there. Next one. Now, I do not own any Cardano, which is odd that I'm talking about it because, as they say, you're supposed to fill before you shill. But I do think it's important to talk about coins that I don't own, just so that this is an objective show, right? That's what makes it legit. And I think what's interesting about Cardano is the first thing is there's two. When you look at this just from the charting standpoint, you see this huge volume. You see this. This isn't even accumulation. This is more of like a mini retracement that people taking profits off of this seemingly unknown coin. You see another big surge, which is when it started getting interest. This is more of an accumulation phase. We're seeing another big surge. The accumulation phase gets even smaller, and now we're seeing a massive daily candle. Walking the stairs. This is a very, very interesting chart. The only problem is that the volume isn't really supporting this. So inevitably, the next accumulation phase will happen. Unless it can pull in more volume, it may go down. The other piece of this coin is the market cap side of it, which I think it's in the $25-30 billion market cap at this point with this new price because it crossed $1, which is 7,100 Satoshis. And so as Cardano increases, that is where this is really the name of the game. The volume, because of the market cap, is getting up from a psychological standpoint. I think that as we've learned, market cap, or I should say, how big something can get is consistently being reevaluated. Just, people are like, oh, it could never go to 100 million. Now people are like, oh, it could never go to 100 billion. And then it could never go to 1 trillion. So it's more of a psychological, how fast it can go up as opposed to how big could it get eventually. So Cardano's interesting. I'm doing my own research on it. There's things I do like. I think that there's some really smart people on this team. I think they have some unique ideas. What I don't like is that there's a lot of smart people who are skeptical of Cardano, and they've probably done a lot more research than I have. And that always is a data point for me. So the only reason I haven't bought it is because this has gone up so quickly at such a high market cap that it was one of those things. It just didn't feel right. I didn't do it. It wasn't in my tunnel vision. Not saying it's not a great coin or it's not a great opportunity. It's just not one that I picked up for own personal reasons. So I would encourage everybody, if you're not a chart person, go do the research, go find reasons. And what I would really encourage you to do is try to find 5 reasons why you would buy it and 5 reasons why you wouldn't buy it. And really have that discussion with yourself, because right now everybody's looking for reasons to buy something and people are not looking for reasons why they shouldn't buy something. And it's good to have that in moments like this so that you can stay grounded, you can stay disciplined. So Cardano, interesting coin. I'm going to keep my eye on it. If it does retrace a lot, that may be an opportunity to check it out. But at the very least, I'm just watching this as kind of an experiment and sharing my thoughts with you guys so that you can. I know a lot of you are watching this. As we all know, stellar, aptly named Stellar with a rocket ship logo. Also very nice. If you guys remember, right around here, like kind of early mid-November is when I started talking a lot about Stellar. And, you know, I was like, hey, this bank thing looks interesting. I'm going to go big, or I'm going to buy a lot of it. I ended up buying a lot of it. It has been an unbelievable return, you know, 10x Bitcoin returns, right? So it's like whatever 25x or whatever US returns, but it's beaten Bitcoin 10 times over since we bought it. So if you bought it, congratulations, it's awesome. Now, that's the good news. The bad news is this is ridiculous. Let me be first to say, I believe in Stellar. I believe in the team. I believe in what they're doing. I want Stellar Lumens to change the world. I want it to change banking, and I want it to change low bandwidth micropayments in third world countries. I fully want that all to happen. But as an investor, this is bananas. Okay? Like, I mean, watching this thing go through the roof. Now, the only saving grace is that the volume is crushing it. So on some level, there's a case to be made that a lot of this price action, I wouldn't necessarily say it's justified, but it has some level of backing, right? If there was a huge spike here and then it was all this low volume all the way through, we were getting this, that would be of major concern. So as this volume stabilizes or whatever it may be, we'll keep an eye on it. But what I would tell anybody is that if you have purchased some Stellar Lumens, take your initial investment out if you haven't done that already, especially if you're up like a couple 100%. Take your initial investment out into, let's say, you know, Bitcoin or whatever coin that you want to accumulate the most, and let the rest just go and do its thing as it figures out what it's doing with its price. Because as much as you like a coin, as much as it's just pouring money into your bank account, you got to be real about it. And that's just a smart thing to do. You can't get drunk on your own, you know, you can't get high on your own supply, right? As Biggie Smalls, rest in peace, says. So I love Lumens. I'm holding a majority, like I've already taken out my initial investment. I'm holding my position. I want it to go to $2 US, which we'll see what happens with the Satoshi price, because that really comes down to what's going to happen with Bitcoin. At the end of the day, when it comes to everything else, what Bitcoin is going to determine the returns that we all get on these. So if Bitcoin decides to ramp in the next couple of weeks, everything is going to get murdered. So that is another good reason why it may be a good idea to take some profits back into Bitcoin. Just as a hedge, it's going to happen. There's no doubt in my mind that Bitcoin will make a huge move at some point in the near future. And when that happens, your US dollar amount for your alts will maintain or even go up. But you know, if you're not diversified, it's gonna be emotionally very taxing, and you may end up not having the same gains as if you were diversified within Bitcoin. So it pains me to say that because I love this coin. I own plenty of it, and I hope a lot of you do too. You know, getting those gains. So it goes. Now, Zcoin, you guys know I've been a fan of Zcoin for a long time. Been talking about this since it was about $7-8. Helped them out with their marketing. Have, you know, big fan of the Z nodes. Own a bunch of, you know, been really stoked about it. And the reason why I'm bringing this up is, one, because I own a lot of this and I talk about it a lot. But two, is the idea of masternodes from an economic standpoint. People have been asking me to talk about masternodes, and I did a video like a couple months ago, maybe, that if you go to my channel, type in masternodes, you'll find it, where I do a little bit of an overview of how to choose masternodes. But the economics are really interesting, meaning Zcoin, let's say you have, so let's say the price is 800,000 Satoshis. This is give or take like $120 per coin. Now let's say Bitcoin goes crazy and goes up to $30,000 US in the next couple months. and all the altcoins, Zcoin included, take a big hit. When you own masternodes, assuming it's a good quality masternode, go watch that video to determine what's quality. It's the same thing as any good coin, good team, good product, good market, everything. When you have a masternode, the payout of that masternode over the lifetime of that you're going to own that coin is in many ways a hedge on how much of a drop you can take in price in order to maintain the same price level. All right, let me explain what I mean by that. Zcoin, if you own a masternode, which are expensive, but it's true for any masternode. Zcoin will pay out, let's say 40% per month, or 40% a year is the ROI. You get paid out every 12 to 15 days. If you own Zcoin for 1 year, that means that you could theoretically take a 40% hit on price, but because you're getting paid out 40% in masternode payouts, your cost basis will maintain itself over the lifetime of that masternode. Right? Do you see what I'm saying? So it's like getting a dividend paying stock where the stock can take a dip, but if you're getting dividend payouts while it takes a dip, you're getting more coins, so your overall value is actually holding itself better. And if you don't know much about that, it's you can do the math pretty quickly on a spreadsheet, or you can look into dividend payments. This all comes down to how well it maintains an ROI status, the quality, and how much it maintains that price. But I am really stoked on Zcoin, especially with their Znode payouts and the way they're going into Znodes and all that sort of thing, the openness they have to promoting that model, at least for the next year or so, I would say, probably 12 months, because it gives me a 35 to 40% price hedge against it dropping because I get all those payouts. So that is why masternodes can be really exciting, as opposed to just owning something for the buy low, sell high side. Because I also think Zcoin could easily go to $500. So you're going to get 4x on the price increase of the coins. You're also going to get that residual dividend, which is a hedge against your price. All right. So this is just the kind of things. These are considerations that go into coin selection. When you're building out your portfolio, this helps you mitigate risk while you can still experience huge upside, not just with masternodes, but just with different coin structures, different charts, different market sizes, different market caps, different structures within the charts. A lot of different ways to look at it. That's one of the reasons why I really like Zcoin this year. Something to think about. You can go and Zcoin's a very expensive masternode, but it's a great coin, so you can still benefit from the price increase. There's a lot of other masternodes. I would say that there's not a lot that are really high quality that that you may lose a lot of that payout over the year, but the logic is the same. It can work really well for you. Last one I'm going to talk about is Civic, which I interviewed Vinny Lingham a couple months ago. We had a great discussion on the podcast here, and Civic has taken somewhat of a tumble in Bitcoin terms over the past few months, much to the dismay of many holders, myself included. But I'm a long-term believer in Civic because I think Vinny knows what he's doing from a businessman standpoint. Like, he knows how to grow and build a business. And I think that they are building out some really interesting products from a dev standpoint. And more importantly, I think that if Civic succeeds, it is a huge and massively profitable problem to solve. And so as you look at the charts, what you're seeing is this thing dipping. Typically, you're going to want to see this sort of volume at closer to the bottom. So there's a little bit of accumulation here at the bottom, and then you see all this big pump right here, which is probably someone out here in Silicon Valley or some coordinated, effort on some level that skyrocketed the price. This was actually probably a pump from somebody else if it's going up that high, but you can see the volume coming through. You're seeing prices increasing as the volume is slowly starting to increase. This looks pretty good. I'd probably want to see a little bit more volume. You'll see some sort of accumulation, But over the course of 2018, Civic, Vinny, despite what, whatever you think about Vinny, that's up to you. His thoughts on Bitcoin and Bitcoin Cash and all that. All I know is the guy, he gets business. And at the end of the day, that's what this is. And that's what's going to drive utility tokens, is their ability to integrate into real world products that people will use to actually have utility. That's what makes them valuable. So I like Civic. I've been owning it for a long time, but I'll probably end up buying more. At the very least, I'm going to dive in again, see what they're up to, because really, to me, the thing that Civic has been missing has been on the product side. They have no problem in partnerships with biz dev, with growth, with anything like that. They're trying to keep up by building good enough products. So I like Civic for 2018. I'm going to continue to enjoy it. So that's just a few of the ones that I'm looking at. That's the thought process that I have going in, as of right now. I do think that Bitcoin, Litecoin, and Ethereum are going to just keep ramping over the next couple months. But in the meantime, these are some of the other pieces of the portfolio that I have and the reasons why I have them. And then again, we'll talk a little bit more about some of the shorter term stuff that, maybe opportunities. This was interesting with Peter Thiel, however you want to pronounce it. I really like Peter Thiel's investment strategies. I think I've never met the guy. I've heard a handful of interviews. I think he's got a very unique style, and he is, listening to a couple of his interviews have really changed the way I invest, especially this year, by not talking about 55 different coins and building out a portfolio of 1,000 different things with $50 in each of them. How he talks about, look, find five investments that you really like and go really big on them, have huge conviction with them, and go long. That has worked out incredibly well with that strategy. And you could see him doing the same thing with Bitcoin. Now, the fact that this article came out on January 2nd is a little weird, in my opinion. Is he trying to make some sort of move? Is he trying to impact the price in some way? Is he trying to get more people, trying to hit the right news cycle at the right time? I don't know. But the bottom line is he's been buying up. I want to say it was like a couple, like 20 million, right? He bought 20 million worth of Bitcoin last year. Now they're worth hundreds of millions. And he's continuing to talk about this, right? So there's a little bit of, the timing is a little bit weird, but the fact that he is coming out and starting to be like, guys like Mike Novogratz came out as the hedge fund, more aggressive one. Peter Thiel's coming out almost as the VC kind of visionary guy. Like, he's the one who sees the big winners, the Facebooks, the PayPals of the world. This is really interesting from a macro standpoint. This is really interesting from bringing in big money into Bitcoin, into getting a lot more credibility in this space, because the more guys that come in, more people, men and women, who have this kind of credibility. So watch for this over the next month. I think you're going to see a lot more people, like individuals, come out and say, hey, look, I'm in Bitcoin. And that's going to slowly infect the banks, the funds, the trading desks, all that, who can't be public about it for PR reasons. Citibank can't come out and say, we're bullish on Bitcoin, but they can make internal decisions. Watching these individuals, that is a very good macro signal for proxies, right, into what the institutional money is going to do. Now, last thing I want to talk about, I just picked up this picture just because this is the only thing that can remind me, is the timing. And we talked a little bit about this as we related to Bitcoin, but business opportunities versus financial markets. Many of you know, many of you don't know, I have built a handful of companies, most of which are related to hot emerging markets, business opportunities. The biggest of which with mobile apps, did a bunch with Amazon, did things with drones, with vlogs, with all these different businesses. And those were always very clearly like hot, hey, you can make money, here's what it is. But making money, like build a business online, work remotely, 4-hour work week, that was always the thing. The thing about crypto is that it not disguised itself, but it came into the scene as a way to saying like, look, this is a revolution. This is, a whole new paradigm. This is a new technology. This is a new financial market. This has never been done before. All of which are true. But what I'm starting to see, and it's just becoming very clear over the last week and into this month, is that it's starting to look like a business opportunity. Not because you're seeing ads all over the place or people selling courses and groups and, whatever. I don't care if people do that. But what I will tell you is that anytime that there's a business opportunity, it starts to become a business opportunity, is that the big money that you see being made is built on tactics that inherently will not work after a certain amount of time. That is what happens with business opportunities, where there's a certain opportunity in a market. You can do a few things and often it works, but as fast as it works, it starts to not work, and then there's something new. And if you can nail it when it works, you can make tons and tons of money and so on. The problem is, especially with crypto, is that this moves so quickly that it's very difficult to be able to point to, hey, here's a tactic that if you do this tactic, you will guaranteed to make money. And what will work is over the long term, right? Over the next 6, 18, 36 months, is honing in your fundamentals, is getting smarter. Because the kicker is you're probably going to make just as much money by doing the fundamentals as you will by trying to do the tactics and making the money as fast as you can right now. But it won't feel like that because it feels like everything is going 100 miles an hour. And this is really important to keep in mind as you guys are making decisions on a daily basis, as you are starting to think about crypto as a real way to not only build wealth, but potentially make income. The fundamental stuff is not just what rich people do, like, oh, hey, you should try not to lose money, or, buy the dips or dollar cost average. It's not just beginner strategies. These are fundamentals that work in markets, and they will continue to work in markets. And while tactics may work here and there, the problem is that if you could keep doing tactics after they don't work, you end up losing all the money you made off the tactics, and you don't know how to stop. And the reason I can tell you this is because this is what happens. This happens in every single market where there's a business opportunity, is that certain people make tons of money with certain tactics, and then those tactics stop working and they keep doing it for too long, and they chip away at all the money they just made. And inevitably they look back and they're like, man, I should have just followed the system. I should have just done the fundamentals that will always work and compounded my gains over a longer period of time. So this is what I see. I mean, you go on Twitter or Reddit, or, you see all these ads over the place for paid stuff. And you got to be aware of that, is that it's so tempting to try to go for the tactics. And you should go, if it's interesting to you, you should go try to make money quickly. But when you look at the real measure, which is how much Bitcoin do you have in 3 years, really, because that's how you're going to measure your wealth. No one's going to measure in dollars. So it's all about how much Bitcoin do you have in 3 years. Fundamentals, psychology, buying great coins, buying the dips, dollar cost averaging, making more money to put in the market, that is going to make you probably the most amount of Bitcoin than trying to fire on tactics, win some, lose a bunch. That's just a really hard thing to do over the long term. It's gambling at that point. So I'm not here to tell anyone what to do. Obviously, there's plenty of good ways to make money in this market, and that's what we're here to talk about. But I do think it's important to bring this stuff up because things are going to change so fast. But the fundamentals, the boring stuff, which is seen as, is for beginners, it's not necessarily for beginners. It's just what works. It's boring. But when you have a market like this, boring is good enough, and you will keep a lot more of your money than if you keep throwing it, right? I see this from personal experience. I'm not preaching. This is like, you can run the tactics, but if you run them for too long and you don't know when to stop, you dramatically cut into your long-term wealth, which is that's why that's the name of the game. So something to think about, different perspective on how to look at this, and so it goes. Cool. Well, I hope you guys have a terrific day, profitable day. Tomorrow and Friday, we'll throw around some of these hotter new coins, some of the tactics that work now, some of the things with exchange arbitrage and all that sort of thing, if you want to try it. But I think at the end of the day, it's important to realize like fundamentals will drive long-term wealth for you. It doesn't matter if you have $500 or $5 million. It's the fundamentals are what will give you the most Bitcoin in 3 years from now, even if it doesn't feel like it right now. All right. Cool, guys. Have a great day. See you later. Peace out.